Good morning, dear student. I am Kunal Kiran from the Millennium School, Lucknow. We have been discussing chapter journal. Yesterday, I have solved one or two questions on journal, how to journalize them. Today, I would like to move forward in solving the question to generalizing the transaction. Before I start solving or explaining transaction, first of all, I would like to recap about the rule of debit and credit. We have learned that accounts under conventional rule accounts have been classified under three categories: personal account, real account, and nominal account. Personal account is related to person, and the rule for debit and credit is debit the receiver and credit the giver. Real account is related to asset, and rule for debit and credit is debit what comes in, credit what goes out. Nominal account, it is related to expenses, losses, income of the business, and the rule of debit and credit is debit all expenses and losses, credit all income and gains. With this recapitulation, I would like to start with one illustration. So in this illustration, it says enter the following in the journal of Yash Raj and Sons. The first transaction, it is on 2019 April 1, sold goods for cash rupees 15,000. So in this transaction, there are two accounts are involved: sold transaction, sold goods for cash, sold goods and cash. These are the two accounts involved in this transaction. Sold, whenever you are selling goods, it is represented by sales account. It is represented by sales account. And sales, the nature of account is nominal account. Sales is a nominal account and it is a income for the business. So the rule of nominal account is debit all expenses and credit all income. So sales account should be credited, right? Now next account is cash account. Cash account we have repeatedly discussed. It is a real account, and in this transaction cash is coming into the business because you are selling goods and customer is making payment to you. So cash is coming into the business, so it should be debited. Rule of real account is debit what comes in and credit what goes out. So the journal entry will be, we will write on the date column April 1st. In particular column we will write cash account debited to sales, and in debit column we will write 13,000, and in the credit column we will write 13,000. Now next transaction is April 7. This is my next transaction. April 7 sold goods to Mahesh rupees 15,000. So in this transaction, first of all, we can say it is a credit transaction because in this transaction cash is not mentioned. So sold goods to Mahesh. Mahesh is our customer. Two accounts are involved. Sales account is involved and Mahesh is involved. Sales, just now I have discussed, sales is a nominal account. It's an income for the business, so it should be credited. And Mahesh is the personal account. He is the receiver of goods, so he should be debited. So the journal entry will be Mahesh debited to sales account. We will write in this way, and we will also write the narration being goods sold on credit. Next transaction, April 18 sold goods to Suresh for cash rupees 12,600. Now in this transaction, name of the customer, that is Suresh, as well as cash, both are mentioned. From the accounting point of view, Suresh is not relevant for us because Suresh, to whom we have sold the goods, but we have made payment, we have received payment from him. So Suresh is not relevant for recording purpose. So two accounts are relevant: sold goods and cash. Sold goods, that is sales account, it's a nominal account, it's an income for the business, so it should be, sales account should be credited, and cash is a real account, it comes into the business, so it should be debited. So journal entry will be cash account debited to sales, right? Now next transaction, April 14 withdrew cash from office for personal use rupees 2500. Withdrew cash from office for personal purpose. Who is withdrawing? It is mentioned in the beginning of the question. It is a journal of Yash Raj and Son. So Yash Raj is withdrawing for personal use. So whenever cash or anything withdrawn from the business for personal use, it is treated as drawings, right? So two accounts are involved, cash account and another is that person owner is represented by drawings. Two accounts are involved, cash and drawings. So cash real account and it is going out from the business, so it should be credited. Drawings, that is owner, drawings representing the owner is a personal account. He's in a position of receiver, so he should be debited. So drawing account should be debited, and the journal entry will be drawings account debited to cash 2500, and we will write the narration cash withdrawn for personal use. Now next is April 30 paid salary to Gopal rupees 1200. In this transaction, if you analyze, there are three accounts. We are making payment of salary to Gopal. So salary account is involved, Gopal is involved, and cash is involved. But for recording purpose, Gopal is not relevant for us because Gopal is an employee and we have paid salary to him. He is no more relevant for us. So we will not consider Gopal. We will consider only two accounts, that is salary and cash. Salary is a nominal account. It is a expense because we are paying salary, so it is a expenses for the business, so it should be debited. Nominal account rule is debit all expenses and credit all incomes. So salary paid is a expense for the business, so it should be debited. So cash, now cash is a real account, it is going out from the business, so it should be credited, and the journal entry will be salary account debited to cash account 1200 in the debit column, and on the in the credit column we will write 1200, and narration we will write being salary paid. Last transaction, sixth one, April 30 received commission of rupees 200. Received commission of 200, although cash is not mentioned, but definitely we are receiving commission, it is in the form of cash. So we are assuming it's a cash, two accounts are involved, receiving commission as well as cash. So commission received is a nominal account, it is an income for the business, so it should be, it is a income for the business, so it should be credited. Cash real account, it is coming into the business, so it should be debited. So journal entry will be cash account debited to commission received, that is 200. So children, please note down note down the transaction as well as record the transaction in proper format. I haven't given you the complete solution here. You will note down transaction, and then you will note down all the entries as well. Do not if you don't want, you do not show it in this way. It is for the explanation to make you understand. Now next, question number 2 I'm giving for your homework. This is same what right now I have discussed with you. Please solve in your class notes. Now come to the next illustration. This illustration says, enter the following transaction in the journal of Hari and Company. The first, now I'm giving you explanation. So April 1st, the first transaction says purchase goods from Vinod of the list price of rupees 40,000 at 10% trade discount. Purchase goods from Vinod of the list price of rupees 40,000 at 10% trade discount. Now in this transaction, if we analyze it, this is credit transaction. There is, because there is no cash is involved. We are purchasing goods from Vinod. Vinod is a supplier of goods and we are purchasing goods. So two accounts are involved. Purchase account is involved and Vinod as a supplier is involved. Purchase is a nominal account. It is an expense for the business, so it should be debited. Vinod is a personal account and he is giving goods to us, so he is a giver. Personal account rule is debit the receiver, credit the giver, so he should be credited. Now before we record, first of all, because list price is given and the same time trade discount is also given, so first of all we also calculate the purchase price. Calculation I have shown here. List price is of rupees 40,000. We deduct the trade discount of 10%, that is 4,000, and after deduction of 4,000 the remaining amount is 36,000. This is my purchase price. So in the solution, purchase account debited to Vinod 36,000, and we will write the narration. Goods of the list price of rupees 40,000 purchased at 10% trade discount, or you can simply write being goods purchased on credit at 10% trade discount. Now next transaction is April 2, return goods to Vinod of the list price of rupees 1,000. In this transaction, we are returning goods to the supplier, that is Vinod. So two accounts are involved. When we are returning goods to supplier, this is represented by purchase return account, right? Whenever you returning goods to the supplier, it is represented by the account purchase return or return outward. So purchase return account, we have already discussed, it is nominal account. And purchase is an expense, so purchase return is decrease in expense, or in other words it's a gain for the business. Nominal account rule is debit all expenses and losses, credit all income and gains, so it is a gain for the business, so it should be credited. So purchase return account should be credited. Vinod is a customer to Vinod is a supplier to whom we are returning goods. He is a person. The nature of Vinod account is a personal account, and he is the receiver of the goods, not cash. It is wrongly written from me. So he's a receiver of goods, so he should be debited. Now list price. He was here in the goods return, and they have mentioned the list price, so you will change the actual price, purchase price of the goods. So for that you have to calculate it. List price is 1,000. You will deduct the trade discount at the time of purchase, that is 10%. 10% you will deduct from 1000, that is 100. So purchase return amount is 900. So the journal entry will be Vinod debited to purchase return, that is 900. Goods of the list price of rupees 1000 returned to Vinod, actual price being 1000 less 10% trade discount. You can also write being goods returned to Vinod at list price 1000 at 10% trade discount. Now next is paid cash to Vinod rupees 25 34,000 in full settlement of his account. Now first of all, we are making payment to Vinod. First of all, we will calculate what is the amount due to Vinod. Means how much amount we have to pay to Vinod. We have purchased goods from Vinod of rupees 36,000, then we have returned 900 goods. So we deduct the purchase return, 3600 minus 900, the amount left is 35,100. This is the amount to be paid to Vinod, but the same time this transaction says paid cash to Vinod rupees 34,000 in full settlement. The word full settlement means although Vinod was supposed to be paid 35,100, but he's agreed to receive 34,000. Whenever the full settlement is written in the transaction, it is clarifying you that he is supposed to receive some more greater amount, but he's ready to receive 34,000 with agreement with the Vinod. Full settlement means Vinod is agreed to receive 34,000 instead of 35,100. It means, in other words, Vinod is allowing discount of rupees 1100 to us, right? Our supplier is ready to accept lesser amount. Then definitely in full settlement, the word full settlement, whenever full settlement is given, it is assumed, it is well understood that supplier has allowed some discount. So what is the amount of discount? We will get it by actual amount to be paid to Vinod less actual amount paid to him, that is 34,000, and the difference is 1100. This is a discount. So three accounts are involved. Cash account is involved, Vinod is involved, and discount received from him is involved. So cash real account, it is going out from the business, so it should be it should be credited. Vinod is a personal account, he is receiving cash, so and the same time he discount what we are receiving from Vinod, that is a loss for the Vinod. So Vinod is simultaneously he is receiving cash as well as loss due to discount allowed by him. So he is a personal account, he is the receiver of cash as well as loss, so he should be debited, and discount received is a nominal account, it's an income for the business, so it should be credited. And the journal entry will be, it is shown here, Vinod debited with 35,100 to cash account 34,000, to discount received 1,100.